For a look at what we should be expecting from the market today with Stan Shamu from IG in Melbourne. Stan, let's start with equities. At the moment, SPI futures are telling us we should see gains at the open. Commodity prices broadly higher. What's in store?
Morning. Yeah, we are expecting a 0.1% gain at the moment in the local market to about that 47.79 level. Of course, this is right near yesterday's high, and we just continue to linger around that mark. I suppose most traders are eyeing that 4,800 level. I mean, with a few things happening in the local market today, it wouldn't be surprising if we test it once again. But some of these levels are hardly broken through without a bit of consolidation. So we'll probably continue to see it act as resistance in the near term. Of course, the big ticket item on the calendar today will be BHP's production numbers for the second quarter. As it stands, BHP is actually matching higher with this ADR pointing to a 0.9% gain to about 36.91. Most analysts are expecting a rebound in most of the recently underperforming assets, with a rebound expected in Escondida copper, whilst the Pilbara is expected to remain quite resilient, with iron ore ticking higher to around that 42 million tonnes per year mark. At the same time, they are expecting a fairly good performance in metallurgical coal and as well in copper and petroleum. So those are the key things to watch out for. Of course, iron ore has always been flagged as a good performer for BHP. But if they can see some of these recently underperforming assets, particularly in copper, gas, oil, and coal, then that could really give its shares a bit of a lift today. So yeah, no, they are due out any time now. So I think that will be the main lead up to the local market open today. Of course, we've already heard from Rio Tinto. They've made some significant changes there, so it wouldn't be surprising if BHP comes out with a bit of a miss there, to start hearing them announce some changes going ahead as well, just to ensure shareholders that they are headed in the right direction and they are committed to turning things around. At the same time, there are the production reports from the likes of Resolute Mining, St Barbara to look out for, but of course nothing will carry as much weight as BHP today.
Okay, great. And just to alert viewers to that breaking news, you can see on screen Google coming out with its fourth quarter earnings. Earnings per share coming in at 10.6. You can see there, and fourth quarter revenues up about 36%, $14.4 billion. We'll keep bringing you across those details. In the meantime, back to Stan Shamu. Stan, the Australian dollar today obviously front and centre. That CPI data, are you expecting an underlying gain of about 0.6%? That seems to be what the market's looking at.
Yeah, that seems to be consensus at the moment. The Aussie dollar is definitely one of the standouts at the moment. It really outperformed the risk space yesterday, even in the light of the BOJ disappointing. Of course, we did see it surge through Asian trade yesterday from around that 105 level all the way up to about 1057. So it continues to hang around that level. Of course, with commodities showing signs of improvement, it's not too surprising to see the Aussie do pretty well in this environment. At the same time, I mean, these CPI numbers, should they come in majorly higher or lower than expectations, we can expect more volatility for the Aussie dollar in today's session. Of course, what the Aussie dollar bulls don't want to see is a situation where the CPI shows that the economy continues to cool at a much quicker rate than expected. In such a case, then this will definitely ramp up expectations for a rate cut next month. As it stands, the swaps market's pricing in about a 34% chance of a rate cut next month. But I think the general consensus out there is that the RBA is probably in a good enough position to wait and see how things pan out first before jumping to act, particularly with this improvement we're seeing in the commodities space. But should that be the case where the CPI data is a miss, then we can expect the Aussie dollar to pull back and possibly retest that range near that 105 level. So that's probably the big thing to look out for. At the same time, if we do see a big expansion in CPI, better than expected, above that 0.6% reading, then we could see the Aussie dollar maintain the current level and possibly even add on to that into the 106 level.
Okay, fantastic, Stan. Thanks so much for your time.
Cheers, Kate.
Okay, let's talk you through these details coming out from Google.